In this video, we are going to be analysing Bed Bath & Beyond, ticker BBBY. So to get straight into it, firstly, we can see we are pushing up now 25% on the day, but we have just hit a 52-week low, basically a day prior. So firstly, if you want to see just how these levels play out, you can always go back and check the analysis videos we did on this. When it was doing this previous pump, we gave you your targets and they hit them basically to the point. So these levels are definitely accurate on this stock, especially as we're starting to see when these stocks move just so heavy to those $30. All you're seeing happen at those levels is hedge funds who aren't already in the trade are really sizing in short at those levels because they know it's going to fall. And if they have the credit online where they can kind of take the short, they know they're not going to get margin called unless it pops 500%. More than likely it's going to work in their favour and they will take that risk, and that's why we knew it was just really going to fall that sharp. And like anything, all these stocks, they move up a lot slower than they fall, so if you're taking it short bias, you do have a lot more stuff in your favour because again you're less likely to actually get stopped. But anyway, onto the levels. If this upward move continues again, I don't really think it will. I'm more bearish on stocks like this just because they don't have the fundamental value. When they move like this, it's moving on strictly hype. And as soon as, you see the hype last for a week or two, then it fades. And then you'll have people bag holding, think it's going to go to the moon. And then you suddenly get a pop like now, 25%. People thinking, yes, it's going to go back to this $30. You're going to make all your money back. Really, it's not. It's probably not even going to break $10. It's probably going to still just continue to slowly fade, and this is just going to be one of its relief bounce days. But if for any reason we do continue and you want those upside targets, we are paying attention to $9.50, $11.20, $16, $17.50, $22, $23.50, and final levels going out to $28 and $29.25. So again, these are our key resistances we would pay attention to the upside. And if you're trading this in any reasonable way, you're probably going to be looking more for shorts coming into those levels. But again, always do be cautious on these kind of stocks. If you're shorting a lot of shares, you probably want to be hedged with options. Now, quickly onto the targets. What are we paying attention to? 375 will be a key support. And really that's the only support we have to give because any other level on the deviation channels are negative. And the reason for this is the stock has just been so weak over the past year. When a stock falls, obviously the deviations are slanted down, as you can see. But when it sells off so hard, the deviations have nowhere to go but negative. And obviously we can't trade a stock into the negative. So owing to that reason, we only have one support at 375. If you want other supports, if we break that, just be looking at the whole and half dollars really. So $3.50, $3, $2.50, $2, and so on. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe and check out one of these two analysis videos.